So why are the markets shrugging off these latest headlines from UBS and Deutsche Bank? Because we're talking about billions of dollars in, call it what you will, but major mistakes. Their stocks are going up on the news.
It's incredible. UBS, $15 billion. Deutsche Bank, actually, we also, now practically every country in Europe is part of this mess. But again, the market's reacting positively. Our Fox panel is here to talk about it, including Peter Schiff, who doesn't shrug this off at all. He's author of Crash Proof, Rick Newman from U.S. News and World Report, Terry Keenan from Fox News, and Scott Martin from AsterLLC.com. So, Terry, why?
Well, you know, someone told me a long time ago, and this is kind of counterintuitive, but the dumbest bankers in the world are actually the Swiss bankers. So I think the thinking is that they've written off everything. They've thrown out all their dirty laundry.
They got rid of the chief at UBS.
Exactly, and so that maybe this actually puts in a bottom. But, you know, how many times have we been sitting here saying that we've hit the bottom? At least 3 or 4 times so far in 08. So, you know, you have to be a little careful, but these financial stocks are down 50, 60%. That's about what they went down in the early 90s. So you can make a case for a bottom, and we're certainly seeing that today.
And look at Deutsche Bank, up nearly 3%. But, Rick, as you see these stocks moving higher on just horrible news, which is, okay, that's the way the market works, UBS's loss alone of $19 billion is something like 5% of the Swiss GDP, I was reading. So this is no small chunk of money.
This reminds me of Don Rumsfeld, who used to talk about unknown unknowns and known unknowns. And this market has discovered there's something worse than bad news, which is unknown news. How bad are these securities? What's in there? How bad is the toxic waste? And it feels like this huge sigh of relief as we start to, the unknowns start to get quarantined over here. We're getting rid of them. That pile of bad loans seems to be getting smaller. The more we know, even if it's bad news, it's something we know, and it's more predictability and more transparency.
All right, it's time for a little cynicism in all this, or at least skepticism of this happiness and glee on Wall Street. Peter, what do you think?
Yeah, you know, I don't know why Sandra Smith's explanation makes as much sense as any, that it's April Fool's. You know,
that was her last comment in jest, Peter.
Well, I don't know what, you know, I've heard one of the spins is that these losses are so horrendous now in Europe that it's going to put pressure on the ECB to cut rates. And that's what put a bid in the dollar today, and maybe that's why the market is rising. But, you know, if you look at the other data that came out, German unemployment today is at a 15-year low. I think the ECB is still more likely to hike rates than cut them. So I would sell into the rally. I don't think it's real.
Scott Martin, what would you do, or at least advise the people who ask you for money advice? Because people look at what's happening today and say, oh, now we know everything that's bad. Right. And there's no way we know everything that's bad. I just want to tell our viewers that. But the perception is that the worst is out there. Time to take a breath and move on and up.
That's right, Liz, and we don't tend to buy on days like this. I think it can be a pretty big trap, and I got to kind of side with Peter on this one. I mean, my theory is that Major League Baseball's back, so maybe Wall Street's on steroids again. I mean, I just have no idea really what's going on with the market today. I'm pretty surprised, and you're seeing a lot of it in the autos. But I do think one other thing's going on here is, as we went into quarter end, everybody thought we'd do this window dressing, right? Financials, autos, home builders, and maybe we're seeing some of that today. Some of these institutions that didn't want to hold these stocks going into quarter end are picking them up on the cheap today with hopes that they rally into the second quarter.
But, Terry, Peter brings up a very interesting point, which is that the strengthening of the dollar may be because of the fact that things are bad in Europe. They have to lower their rates, which, of course, would make U.S. Treasuries and other securities more, more valuable to the Europeans. So that could be good news for us.
Yeah, perhaps, but I just kind of agree with Peter. I don't think the ECB is going to cut rates. They've been kicking and screaming. They had a bias to raise rates back in August when we went into this whole mess. So I'm not sure if they're going to. I think but there was a factor of a lot of people kicking out. You know, they didn't want to have Citigroup on their quarter-end balance sheet, the portfolio report, and some of these other companies. They might be buying those. But you have to ask, what's the profitability of these companies going forward? You know, the mortgage lending has shut down. The lending for deals has shut down. The derivatives trading has shut down. So these stocks might look cheap, but you have to remember their earnings are going to be really encumbered going forward.
Rick, yesterday we had an executive from New York Bank, Bank of New York Mellon. And as he was leaving, we said, you know, what do you think when people say, oh, Citigroup or insert big bank here is too big to fail? And he said, nothing's too big to fail. So is another one of these things hanging over our heads?
This is part of the stability that the Fed has brought. Sure, the problems could be hanging over our heads. It seems the Fed has made the case very clearly that Whether they're too big to fail or not, they're not going to fail right now.
And what about the ups and downs of a company like Lehman? Take Lehman, which was beaten down terribly over the past couple of weeks, up 13% today. Is this just people catching a falling knife, or is there real hope there?
Well, they just announced that they were able to raise, what, $4 billion.
Yeah.
Now, they did it with a preferred, and they're paying 7.25%, which isn't as high. I think Citi paid 9%. But still, that's expensive money, I mean, in today's market. And, you know, I don't know, the fact that people were willing to buy it, one of these days they're going to try to stop catching that knife. I mean, all these people that are coming into these issues for these banks.
We had a telecom yesterday who had to place bonds at 13%.
Who was that?
That was Fairlawn. Fairpoint. Excuse me.
Peter's right. I don't think a single entity, whether it's a foreign government or an investor, be it Eddie Lampert, has made money trying to invest in these.
Just the coupon. I mean, they're making the coupon.
Yeah, they're making the coupon.
But they're also losing on the foreign exchange.
And Scott Martin, we look at all of the U.S. mutual funds, and many of them lost money this past quarter, and a lot of people have taken money out of U.S. mutual funds. So where's the money to be made?
That's right, Liz. And I mean, you're seeing some disastrous numbers that are coming out of these mutual funds. And again, I think it's coming in, Liz, to where these depressed markets are right now, or these depressed sectors are. And that's where some of the money is flowing into right now. And you're seeing some of these people take out money of mutual funds, and maybe they're investing it on their own. Who knows? We'll figure that out, I guess, in the next couple of weeks, but to see if this rally lasts. But again, I think you're going to have to be these mutual fund managers that are coming out now as it's 4-1 and saying, okay, what are some of the depressed sectors for the second quarter? And we're looking at those rally right now.
Okay. By the way, we're talking about Wall Street and how it affects.
Even if you have concerns about the American economy, you might not agree with this headline.
I hope not. This is the latest edition of The Independent, not from the 1920s. USA 2008, the Great Depression. The United Kingdom boldly proclaims that the U.S. is in the throes of a modern-day Great Depression. At least this one newspaper does.
And is this over the top, even by British tabloid standards? Our Fox panel back now to debate it. Peter Schiff, The Independent, this newspaper, uses certain statistics and metrics, most of which have to do with the usage of food stamps increasing in certain states. But it does appear that in about 40 of the 50 states, usage of food stamps has gone up. So they are then using that as the metric by which they are judging that we might be facing yet another Great Depression. Do you agree with that?
Well, I don't know if I would necessarily use that analogy, but I think so. I mean, I didn't title my book Crash Proof for nothing. But, you know, I mean, if you remember what happened, you know, why we had a Great Depression. The Federal Reserve in the 1920s inflated the stock market bubble. It burst, and then when the recession ensued, the politicians, both Hoover and Roosevelt, didn't want the free market to sort it out. They came to the rescue, trying to save everything, and of course that created the Depression. Something similar happened this time. The Federal Reserve now blew up two bubbles, first in the stock market and then in the real estate market, much bigger than the bubble of the 1920s. Now those bubbles have burst. The market is going to bring in a recession, and now you have politicians trying to interfere, trying to make it better, and now we run the risk of them creating another depression.
But Scott Martin, we had other factors in the 30s. We had a trade war that began with a Smoot-Hawley Act that lasted through the 30s and made things even worse. We had a whole lot of factors that added up. First of all, we didn't have as solid a middle class as
much
we
more
have
limited
today.
Economy.
So it was a very different scene. Isn't this at least exaggeration by a British tabloid?
I think it definitely is, David. And I'd rather personally eat the food that the food stamps afford me in the U.S. than eat any food in the U.K. So
great point.
Take that, Independent, okay? David, exactly right. I mean, the economy, and I like Peter and I like his thoughts, but I tell you, the economy now versus 1920 or 1930 is completely different.
Yeah, it's much worse.
It's a much more variable economy, much more diverse, and it can get out of other problems. Now, we're also seeing this stuff pop up in different states where there are industries that are depressed, like manufacturing. So that makes sense that maybe more people are on food stamps, but there's also a ploy in those states, guys, for people to go out and enroll for these programs. Yeah. So naturally, the subscription is up.
Well, Rick Martin, Rick, what do you think about that perception? Because also, you look at the free market and how it works. We're going to have a guy on in the next hour who is buying up huge numbers of homes that are in foreclosure in Michigan, because he can buy them in bulk and turn them around, make a lot of money. The free market is stepping in here and doing pretty well. There aren't the food lines that we saw during the Great Depression?
I'm looking forward to David having a whole segment on the Smoot Hawley Act.
High ratings, really great ratings on that.
The food stamp statistics actually get to another legitimate problem, which is there is a growing gap between rich and poor. I mean, this is income inequality, and this is an acknowledged problem. But we've all been hyperventilating over the last few months about what might at best be a mild recession. We like to think we're modern people. We can outsmart the business cycle. We can't. We're in the downside of the business cycle right now, and we're seeing everything associated with that, which is fire sales. People are suffering some pain. We will pop out of it, and we'll have a.
And Terry, to put things in perspective, we had unemployment at 30% during the Great Depression.
Exactly.
Our unemployment may go up, but it's nowhere near that now. We have a stock market right now that's up 366 points.
And I'm reading Amity Schleye's book on the Great Depression. I mean, if you want to read that and look at today, you see you had teenagers committing suicide because their families couldn't put food on the table. I mean, that's a far cry from people using food stamps and that increasing in 40 states, and we also had huge...
By the way, they didn't have food stamps back then.
Exactly, and we also didn't have deposit insurance, and there was huge price and income deflation, which we are not seeing yet.
That helped people, Terry. Remember when
well, it didn't help them if they had debt.
Right, but if you go back to the Great Depression, only 2% of all the money on deposit at banks were lost. The people that didn't lose money, prices fell. Conversely now, with inflation as rampant as it is, every year Americans lose far more money than was lost during the entire Depression, and the cost of living is going up, not going down.
But if it's the most leveraged economy that we ever had, you want inflation to work your way out of it. You don't want deflation.
Well, not if you're the average American
who's
trying to survive. And remember, we're just getting started, Terry. This is the beginning. You're talking about the depths of the Depression. This current Depression is just getting started. Let's see how it is in a few years.
Scott, I know that you think opposite of what Peter does, but the inflation picture, how will that then play as these months go by into the picture?
Well, it's going to be difficult, and that's one thing that I think was mentioned in the food stamp article, is that a lot of these costs of food and gas are outpacing the rise in the food stamp generation. And so the problem is that that's obviously an obstacle that they're going to have to tackle. But Liz, it's just like a cyclical thing. I mean, I think eventually, whether this slowdown lasts 3 or 6 months, I think eventually you're going to see prices slow down a little bit on the upside, and so that'll help people out eventually. I mean, we're not going to get into a period where milk's going to suddenly be $10 and people can't even buy a gallon of it because they don't have food stamps.
If you can hold on a second, we want to go to the Senate. Very much.
There's a question here. Who has done more good for America? Is it Congress or the oil companies?
Our Fox panel is here to talk about that, including Peter Schiff, author of Crash Proof, Jordan Netburn of Axiom Capital Management, Terry Keenan from Fox News, and Victoria Barrett from Ford. So, Victoria, very simple question. Congress, oil companies, who's done more?
It's a simple question with a very complex answer. Look, if we're talking about recent events, I don't think Congress has done all that much, and they actually risk doing more harm than good. Oil companies have explored in very dangerous places. I mean, we take it for granted that these companies do take tremendous risks to increase oil production through exploration, and we thrive on oil. So I can't really answer your question, but I think the oil companies are getting a rough deal in Congress this week.
Jordan, the question is a little flawed, obviously, but we're oversimplifying a very complicated issue. But you talk about all the jobs that have been made by certainly by the oil companies, but the U.S. government is the largest employer of everybody here in the United States, and Congress has had something to do with creating those jobs. Do you look at it from that perspective or from a different angle?
I look at it from the perspective of I think there's been a big deficiency in probably the last 30, 40 years in that we haven't built any new refineries. So I think there's some cumulative problem here in this country in that we have to now import excess capacity. And we really need to examine what we have. International legislation kind of prohibits or is more accretive to stimulus and to drilling. And our legislation, I think in some points, borders on absurd, and I think we can't get near to our supply.
Well, Terry, the real crux of the issue that these guys are being drilled at, if you'll forgive the pun, down in Congress, was whether they deserve the tax breaks that they get for going. They say without these tax breaks, the foreigners would be even more in control than they already are.
Yeah, and Russia's lowering taxes on its oil companies, and the oil companies, I mean, heaven forbid, they make money. They're the only stocks besides the gold stocks and the metals that have been, and the basic materials that have been going up in the last 5 years. They just put Chevron back into the Dow Jones Industrial Average. I don't think that's ever happened before because it's making so much money. The oil companies are the biggest taxpayers, and if people are worried that they're making too much money, look at the
but Terry,
people on Wall Street that we've been bailing out.
Heaven forbid they use some of those hundreds of billions in profit to pay for their own exploration without using taxpayer dollars. That, I think, Peter, is something that people are looking at now and saying, we helped them for a long time. They're on sure footing now. How about shifting some of what was appropriate then to something that's more appropriate now, like engineering or technology?
Well, look, I mean, these companies are in business to make a profit for their shareholders. If anybody, is upset about that, they're free to buy the stock and share in the profits. But, when ExxonMobil, when they produce jobs, they do it out of their own revenues. They do it by providing Americans with a product that they badly need, petroleum. The Department of Energy doesn't produce one single barrel of oil, and when the government creates jobs, it does it by taxing us. It destroys jobs to create jobs. They destroy far more jobs than they actually create. But we need private enterprise. And, look what's going on here with these hearings. I mean, Congress is in there making a big deal about what's happening in the housing market. Where were they 3 years ago, 4 years ago, when they could have done something about it? They didn't want to rain on the parade. They knew everybody was making money in these phony mortgages and the crazy home equity, but they didn't want to rain on the parade. The same way they didn't want to rain on the parade.
Victoria, you could get the best minds in the world to make very good explanations, as we've just heard being made, to defend the oil companies. And still, when a guy goes to the gas station, pumps up his tank, pays $60 for something that used to cost $40 or even $30, he wants somebody to blame. And he looks at these rich fat cats running the oil companies. He says, aha, there they are.
But at least there's oil there.
Yeah, but he'd be worse off if he was in Europe. I mean, oil prices are still higher over there. We've got a pretty good deal. And let's put these numbers into some context. We're talking about $18 billion in we're calling these subsidies. I mean, they were essentially incentives to encourage exploration years ago. So these are $18 billion over 10 years, so call that $2 billion a year. And the top oil producers made $125 billion in profits last year. I mean,
so
it is a drop in the bucket to them.
I mean, why do they need the drop in the bucket?
It's a drop in the bucket, but they're not making the CEOs of General Mills and Kellogg's go up on the hill and explain why cereal prices are going up because grain has doubled.
Or sports stars.
Because grain has doubled, or why my lattes are, $5. I sound like I live in the ivory tower. Shouldn't have said that. But,
darn Starbucks.
But lots of companies make much fatter profit margins, and this is a capitalistic society. You want to see what could really hurt is these oil companies could just start taking themselves private and not invest any money in exploration, buy back their stock, and go up to $200 a share.
Absolutely. There's a depleting asset factor that goes on with oil right now. There's a huge raw secular story coming out of China, India, Russia, Vietnam, and there's tremendous global demand. So it's basic econ 101, supply and demand. Price is higher. Yes, these companies are pulling it down to the bottom line, but it is a capitalistic society.
But I say leave it to the free market. Then you get cars that are built that don't need oil to run on, and the next thing you know, you've got a whole different
It'll happen
sort of
eventually,
metric
but the price of producing alternatives is also rising. Inflation is rising the cost of all the alternatives to oil. Yeah. So it's not that oil is getting more expensive. Our money is losing value.
All right. I venture this is not the last word on that subject, particularly as these hearings continue in Washington.
You have to say our money is of less value.
I know. Gold or money, it's in there. But we love Peter. All right, more mega write-down.
Well, Chrysler is just coming out on this day of auto sales for March, and car sales down about 19%. The light truck sales down 22%. So weakness continuing. They're not the only ones. General Motors reporting a 19% skid in the sales of cars and light trucks. We also had Ford seeing a 14% sales drop. So clearly this is still a very tough time for the U.S. automakers trying to come up with cars that people want to buy. Although if you talk to Ford, which we did, Alan Mulally last week or 2 weeks ago, he said, we're doing great everywhere but the U.S. Europe, the Ford Focus is a hot car, so it's managing to get the alchemy correct here in the United States.
And on a day when the market is up 379 points, it's hard to see anything go bad. And in fact, that Ford stock is up. Of course, Chrysler is no longer a publicly traded company. They didn't probably have to give out their figures, but despite the poor figures of Ford, the stock is doing well. So perhaps it's the day, perhaps it's something that folks see beyond these days' sales figures, or maybe they've already cooked them into the price of the stock.
Ford said second quarter would be the most challenging. morning, and General Motors said that, you know, looking forward, they seem to have hope, but they always say that. I mean, Rick Wagner's Mr. Optimist, certainly, but General Motors up about 5% now. Wow, what a way to begin the second quarter.
I'll say, who would have guessed from yesterday?
You know, the Bears are hiding at the moment, and the Bulls, boy, did they need it.
Not only is the Dow up 382 points right now, but the NASDAQ percentage-wise is up even a greater amount, 76 points, but 3.38% of the total. S&P, Russell, they're all up. And, of course, gold, we focused on oil, which is down again, but gold is down, and gold is down significantly. Not only is that significant if you're a holder of gold stock or if you're short gold, but also as an indication of what the dollar is doing. The dollar is very strong today, and perhaps as a result of that, folks who were betting on gold as a hedge against inflation, against the dollar itself, are not doing so well. And speaking of which, of whom, we have one of those traders. So you're big in gold. Let me guess, it's a buying opportunity.
You said it.
I knew it.
I'm not, the Bears aren't hiding. I'm right here. I'm on television.
Well, Tracy Burns is on the floor of the New York Stock Exchange, so let's just shift this to the equities picture, Tracy. What a day for the Bulls. Yet again, volume a little light. Either way, I'm sure the traders down there would take it, but what is the number one thing they're talking about here?
Tell you what, Liz, I'm hearing a lot of short covering. You know, we started the day off and the shorts were panicking. And now it's very interesting to note that the stocks that have been shorted the most, Merrill Lynch, Lehman, are the ones that are up the most today. So they got nervous. The shorts got nervous. The bears are getting nervous, quite frankly. Many people walking by saying this could be it. This could be the bottom. We might be seeing the bottom. There's a lot more people thinking that we might be out of the woods. Alan Valdez said it earlier, though. It's been such a volatile quarter. Over 35 days in the last quarter saw 100-point swings. That is a ton, and it's a very tough market to trade, which is exactly why these guys are nervous. But as a result, they were reacted, and so that's why we're seeing this up today. Also, too, someone noted that it's not new money. It's pretty true. You know, $3.5 trillion are still sitting in money market accounts. People are still not all pouring their money back in. Of course, this is the first day of the second quarter. We got a long way to go, and I bet you will start to see people coming in, but we haven't yet. This is old money playing around. As I said, the shorts covering pretty much because they got scared.
Well, Terry, I have money in a money market account, frankly, because, you know, you see what's happening in the world, and
millions of other people.
Yeah, we're stuck. So at what point would all those money market accounts, $3 trillion of which, start to move into stocks?
When people feel safe. I mean,
Are we there?
The Bulls have had so many days in the sun, supposedly, this year, that they need, 50 SPF sunscreen. But then we never build on these rallies. We're no higher than we were February 27th. So I'd like to see a continuation of that. I also like to see people stop speculating in Bear Stearns stock. I mean, that doesn't happen at the bottom of a market. Everyone's trying to catch the bottom and make 2% here on Bear Stearns. Nobody notices that it fell from 170 to 10. They're going to make 3% on this stock. I don't think that happens at the bottom.
But Jordan, are you seeing any signs of a bottom, or is this just another bear market rally?
It's tough to say right now, Liz. The reality is you've seen bearish sentiment extremes being reached. So on a sentiment basis, I think it's pretty negative out there, which usually will set the stage for a bottom. Price action usually first, though, which you take today's action. Today's action, you see, I think, a very substantial breakout on the S&P, and it gives the bulls some credence. We've had this very rotational market since the beginning of the year, so whereas up until 2 weeks ago it was gold, silver, commodities, now we've seen some money move back the other way out of those areas and into the equities market, so I think it's a good place to start.
And the last 20 seconds goes to Peter Schiff.
Oh, no, yeah, I was here, in the same seat maybe 2 or 3 weeks ago. We had a 400-point rally. We have another 400-point rally today. We haven't gone anywhere. We're at the same level we were then.
What would you buy on a day like today?
I bought some gold stocks this morning on the town car on the way in. That's what I'd buy.
While you were driving
yes,
in, you bought the gold stocks.
I did.
Which ones? Newmont?
Huh? I did buy some Newmont. I also bought some Umata.
And I said I was elite drinking my latte. I take that back.
All right. Well, we are closing in on one heck of a way to start the month of March here. The Dow is now trading above 380, and we will take a huge gain. Will it last?
Yeah,
that's the question.
Transport's up 189. We've got much more. 9 minutes to the closing bell. 6 minutes and counting, the third best day of the year for the Dow Jones Industrials.
Incredible. We have a lot of stocks that are reaching their 12-month high today, whether it's on the Dow or the NASDAQ or a combination of them. Everything is up. A lot of optimism from just about everybody but Peter Schiff. Let's take you to the end of this trading day and start with Terry. Now, Terry, the question is, when do those people? We talked a little bit about the people who are all in cash. And, in fact, a lot of folks overseas are in cash as well. When did they see? Clearly, it wasn't 12,500 unless some of that money, because the volume is still pretty low. So when did they feel comfortable getting into this market?
That's the $64,000 question. One thing that concerns me is there didn't seem to be that much panic or concern even among small investors during this whole ride down. And we know that the Dow was off about 13-14% from its highs. And I didn't hear so many people talking about, oh my God, what's going on, or I'm going to take money out of my 401k. I know the mutual fund flows show some significant outflows, but I don't know if this is the time where people are going to feel comfortable to get back in.
Victoria Barrett, we were using Pulte Homes as an example in the last segment, just about how that was an $8 stock just a month or two ago, and now if you were to look at Pulte Homes today, it's getting closer and closer to $16. So that moment of fear where all the home builders were drenched in horror, now everybody's up today, and Pulte's nearly doubled its money.
Yeah, the home builders really got clobbered early, and since then, sort of every sector has gotten clobbered. There's no safe space, I guess, with the exception of gold and what Peter's doing. But you could be in tech, you could be in even in oil, and you didn't do that well. So I think, to your point of what's the moment when people finally get back in, it's when you hear executives on earnings calls optimistic about the future. And we haven't heard that yet. People are very cautious. They're saying deals aren't getting done. They need to go through more approvals. Everyone is kind of frozen right now. And I don't see any signs of that turning, not in technology, certainly.
Well, and let's move over to financials, Peter. I know you don't think this is the right time to buy into financials. May not be for decades, according to you. But the point is, people did it for some reason today. Why? Was it because of the news of the write-down by UBS and thinking that maybe finally we're getting a price for some of these financial firms?
And by the way, Peter, David pointed out we got an email from a viewer who said, what the heck is a write-down anyway, and how does it affect us?
Well, a write-down is a loss. I mean, they're having to disclose that their collateral isn't worth what they thought it was.
Wipe it off?
And they got to just take a hit against their earnings. Just, it's like if Americans have to write down the value of their house, right? You bought a house for $500,000, it's only worth $300,000. Like a $200,000 write-down. But, I don't know what the catalyst is today. Bear markets have rallies. They have spectacular rallies. And so you're going to have them. But, remember, if you look at the catalyst again today, talking about all these problems for the banks, the investment banks in Europe, why did they have problems? It was because of money they loaned us that we can't pay them back. It's because of all the bad paper that Wall Street sold them. It's not because of problems in Europe. It's because of problems here. And so I don't think you're going to see, the ECB reacting to these losses by saying, oh, gee, we need a rate cut here in Europe, with inflation running at 3.5% over there and unemployment at a 15-year low in Germany. So I think it's, a short covering rally. People are positioning here, but, the trend's still down. I would just...
Jordan, trend up or down, isn't there always a way to make money in any market?
It's so funny you said that, Liz. I was just going to say there's always a bull market going on somewhere. And if you look around, you'll notice that the things that got absolutely clobbered, which I think Victoria was saying before, the home builders got smashed last year. Financials got annihilated. The retailers got hit. These are the strongest areas. So within this tape, there are some areas of bifurcation. There are some strong areas that are seeing money flows, and these institutions have to put their money somewhere, hopefully for some period of duration where we can capitalize on them. But absolutely, there's always some place to go. If you notice, there's also another subtlety. The dollar has gotten traction in the last couple of weeks on several different sessions. And if you see today, the dollar's been strong again. Anytime the dollar digs its heels in, which everybody in the world is betting against right now, you've got to believe there's some daylight.
And Terry, I just want to put it full circle, because we had a great guest on who was buying these houses in bulk and then repackaging them and selling them. He said there is no problem that the right price won't fix. I love that response.
Did you see these auto sales numbers down 19%
but the
for
stocks
Chrysler
are up.
And GM? This guy's packaging homes in Michigan. And Toyota, even Toyota can't sell cars in the U.S. Down 10%. Yeah. I've never seen numbers like that.
But at the right price, he's selling these houses. Who's buying it?
At the right price, I'll have 20 pairs of Louboutin pumps.
Only
Always puts it
Terry,
in
look what's
perspective.
pumps. I love it. Well, as we finish up and we get closer here, just a minute away to the opening bell, Peter, again, there are always places to make money. You said you were buying some of the miners today. Where do you see them going?
Well, they're going to go higher. We've had a very sharp correction in gold mining stocks. Many of these stocks that were at all-time highs just 2 weeks ago have dropped 20% in just a span of a week and a half. Just like bear market, bull market rallies are spectacular, bear market drops are just as spectacular, and the big moves down are in the mining sector, in precious metals. It's a great time to buy.
And Victoria, we got 10 seconds. NASDAQ, as we hear the closing bell, that's the story of the day. It's up 3.58%. Any particular stock stand out quickly?
Well, I think you look at Amazon, Salesforce, companies that are driving what I like to think of as the cheap revolution. We talk a lot about it at Forbes. Companies that are giving you leverage.
All right, terrific. Thank you, gang. Well,
Thanks.
look at this. We couldn't quite make 400.